Welcome back, guys. Now that we've been through kind of the background of the expense side of things, I'm going to get into the demo here. And to start out, I'm just going to create two different sets of bills, one as an indirect expense and one as a direct expense, and then I'm going to show you the difference between the two. So I'm just going to go to New Transaction here, and I'm going to create a bill, and I'm going to choose my vendor. To start out, let's find something that would be a direct project expense. So it's going to be this. We'll use this Norton Lumber and Building Materials. That's going to be something that we're going to want to record, directly to the project and not to an overhead account, since we're in this scenario. Say we're purchasing material for that renovation job for Starbucks that we set up. We're going to use, your invoice number here, and again, this is, a bill and not an expense. So this is, something that's going to be paid on an account, and it's going to be, once we record this, it's going to be reflected as a liability and payable. And once you pay that invoice, it'll be removed from the payable side of things on the balance sheet. So we have our bill date, we have our terms, we have our invoice number. Now this is where the difference between an overhead expense and a direct expense comes into play. Since this is a direct expense, we're not going to use these categories up here. This is something that I'm going to show you during the overhead side of things. We're going to use these products and services, and we're using these because we can. These are going to be linked directly to your cost of goods sold account. And like I said, since this is a direct expense, it's going to be recorded to cost of goods sold, but instead of having a million different cost of goods sold accounts, we can set up these items and link those items directly to the proper cost of goods sold account. So, for instance, we're just going to use some of these that are pre-filled here. We've got some, fountain pump and sprinkler heads here. We're just gonna, assume that Starbucks needed these, and we're gonna purchase these here. And again, these are going to be defaulted to those cost of goods sold account. And then, the other thing that you need to make sure you record in this scenario is the customer at the job, so that the expense can be applied directly to that job. So we're just going to type in Starbucks here again, and here's our customer and sub customer. Again, make sure you select the sub customer so that it's applied correctly. And we're going to type in same thing, and that'll be applied directly there. So save and close, and that is created. So there you have it. That's your direct expense. I'm going to move on and show you the overhead expense very quickly here. Same setup, but we're just going to select a different vendor. Let's select Fidelity. And we'll just say, this is for life insurance for the company here. We'll use the same bill date. We'll use a different invoice number. We'll just use 2 in this scenario. This is life insurance, so instead of the products and services like we talked about earlier, this is an overhead or indirect expense, so we're going to use the categories, which are expense accounts directly on your profit and loss or income statement. So, once we record this, if we run a profit and loss for the month of June or any time within that period, that $500 is going to be shown in the insurance expense account on the profit and loss statement. So there's that. We don't need to select a customer, since this is an overhead expense. It's not directly related to the project. It's a company-wide expense, not necessarily for that one project. It could be multiple projects, or it's over the course of 12 months or multiple years, so to speak. So we're not going to apply it directly to the customer. And I'm just going to select save and close, and there's your 2 bills right here, and there you have it.